What's up everyone, Dylan here. I wanted to hop on and do another episode of the weekly analysis video. This week's going to be on the shorter side because I am sick. I've been battling the flu for the last week and it's been kicking my butt. So I wanted to hop on and do a short update on a recent trade that I took, as well as where I believe the market heads next. With that said, we'll hop right into it. Today we witnessed the single biggest drop day of 2024. And I was fortunate enough to be able to catch it. Okay, so yesterday, I took my first short trade of 2024 on the S&P 500 futures. Okay, you have other people trying to catch the top all year, right, in 2024, all throughout January and February, they've been trying to guess the top, right? Yesterday was the first opportunity that I saw that the risk reward was very favorable and the timing was perfect. Okay, so we're going to get into that. Okay, why did I short yesterday as opposed to last month or last week, so on and so forth? It was a lot to do with the confluence and the timing. Okay, so you could see here yesterday pre-market. As for my plan short, I'm still interested. Ideally, I want one more pop above 5,050 where I will have resting limit orders spread out. Tomorrow is CPI, which may help out with this, which it did. And then Wednesday, we have vixperation as well. Notice how I said Wednesday we have vixperation. What is that? Okay. Vixperation is literally when the VIX futures expire. So tomorrow morning, the February VIX will expire. And then those futures contracts will roll into March, okay? Usually, vixperation, which happens once a month, will tend to mark key pivot points where sentiment will change. So when I saw yesterday, S&P was at a key critical trend line, so it had technical resistance, and it lined up with vixperation. That told me that this was the opportunity. I have not seen a solid opportunity before today as for this year. Okay, that's why I haven't shorted, and yesterday was the first time I did. So, what was the area that I wanted to short, right? S&P had this critical trend line. You could see that it worked perfectly. I mean, way better than I expected in plain English. So it tested in December of 2022 and then again in July of 2023, right? Both times produced a nice pullback, okay? Then again, yesterday was the third test. If I go to a 30-minute chart, you could clearly see that S&P managed to rally all the way up there, has been very resilient, making higher lows, higher highs, up until that trend line got hit, and that's what marked the high. Like I said, it just so happened to be on the same week as vixperation. This week also has a bunch of other catalysts too, which so far has helped me, right? You had CPI today, which helped me. This is the move we got from CPI. As you can see, came off very hard as CPI, both the core print and the headline print came in hotter than expected. We also have jobless claims tomorrow, PPI Friday, and consumer sentiment Friday, as well as, like I said, the vixperation tomorrow. So jobless claims Thursday, and then Friday we have PPI and consumer sentiment. So the timing was very, very, very important. So this was not only the only resistance level that I had. I also had different resistances on different instruments as well. NASDAQ also had a key trendline resistance. You could see, right? 1 test, 2 tests, 3, 4, 5, 6. This trend line has 6 different daily tests, and it has never had a daily close above it, right? That is clear resistance. So when S&P hit that line yesterday, NASDAQ was also testing that key resistance as well. We also have the RSP, which is the equal weight S&P, right? I've gone over that on this channel. That was hitting a key high as well. right? See how it hit that high? We'll go to a 2-day chart. You can see better, right? This high came up right there. That's exactly where it rejected. So that was another piece of confluence as well. On top of that, we have NYA, right? This is the NYSE Composite Index, basically all of the instruments that are traded on the New York Stock Exchange, right? This also came up to a key resistance area, right? You have 5 different tests previously. 1, 2, 3, 4, 5, all wicks up there. That's exactly where it failed yesterday, okay? So you had S&P at the critical trend line, NASDAQ critical trend line, NYA and RSP also at resistance areas. So you have different instruments all at resistance near the same time on a key week of vixperation, CPI, PPI, jobless claims, and consumer sentiment. So, right, we're starting to see that sentiment flip, okay? And what I mean by sentiment flip is going from buy the dip to sell the rip. So anytime between October, right, the October lows, late October lows, from that point to, say, yesterday, we were in buy the dip mode, meaning every dip was getting bought. You were seeing higher highs, higher lows on the way up, right? The sentiment was bullish. You had algorithms buying dips, buy programs were just gravitating the price higher. Now, I could be wrong, but now with this vixperation week, right, and the fact that we just hit a very, very important resistance across different instruments, that sentiment now might switch. If it's going to switch, it's going to be on vixperation, in plain English, okay, a vixperation week. So now what we want to see is if rallies higher get rejected, okay? So where do we start? For starters, the rule of thumb is the 50% retracement. So you go from the recent high to the recent low, and that's technically where the bears should try their best to sell. That also lines up with the 5,000 psychological whole number as well. So if you see price gravitate up there and then be able to sustain value and hold, something like this, right? If you see something like this happen, right, where price gets above and then holds, right, that's not a good sign for bears, right? That would mean that sentiment may have not changed, and that prices may test higher highs from where we were yesterday. Okay. However, if you start to see that that the rips in the market start to get rejected, then we can assume that the market sentiment will flip from buy the dip to sell the rip, and that we'll start to see lower highs and lower lows form over the coming weeks. So basically what I'm saying is map out resistance areas, previous support, and see whether or not those areas get defended by the bears, okay? In terms of downside, if more downside occurs, I'll be looking at the 50-day moving average for a downside target. I'm still in half my position. I've scaled out of the other half, and in case of any runners, I will have the other half to scale out of. But this 50-day moving average is kind of like my ultimate downside target, which also lines up with this consolidation area. So the market consolidated for a few weeks before making another leg up, and that's kind of where that 50-day moving average lies. So essentially what would be nice is if the market kind of dilly-dallied, maybe retested that 50% retracement, came off, and kind of started that sell the rip trend down. Okay, something like this. Okay, where that the general area gets tested. Okay, that's kind of what I want to see happen, considering I'm in a short, and that would be beneficial, right? I also wanted to go over JC Parrots. So I posted his link in last week's video in the description. I don't know if anyone actually reads that stuff, but this guy's got great charts. His company's All-Star Charts, and he goes over, I recommend going through his media on Twitter, and he goes over a ton of great stuff that I've been going over. Remember, I went over this one, right? The S&P versus TLT, right? The bonds. So he's been looking to short for the last, I want to say 2 weeks. Maybe not 2 weeks. Maybe, I think it actually has been 2 weeks. So for the last 2 weeks, this guy's been talking about different divergences in the market and how there's been flickering red signs that don't look good at the highs. Basically, he's showing different things similar to myself, right? The U.S. dollar compared to the S&P, TLT compared to S&P. He goes even over more stuff, right? The yields. This is something else that I've gone over too. As the market went higher, the S&P 500 percentage of names declined below the 50-day moving average and the 200-day moving average. So a lot of stuff that I've talked about, he also covers. So I recommend you guys go through his charts, and he also has some descriptions for them too. So basically what I'm saying is JC Parrots agrees with me that there are some red flags in terms of market internals. And that's what also made me want to short the market even more. So I've been telling you guys over the last few weeks that I've been seeing some red flags that kind of show that the market coming off is kind of imminent. So I recommend checking his post out. So like I said, my voice is effed up. That's probably going to be it for me today. I'll try my best to hop on, soon. I do have to say that next week I'll be away. I'll be visiting my parents. So I don't know if I'm going to post a video next week, but you'll be hearing from me sooner than later. Peace.